James here. This is another edition of Hashtag Finance, filming atop First Canadian Place in Toronto. We're on the 72nd floor. No better view across the country, but no better conversation to be had today, too, with none other than Richard Carleton, our first repeat guest on the Hashtag Finance podcast. Richard, thanks for joining us today for this very special podcast occasion. So, full disclosure, this podcast is a public entrepreneur production. Public Entrepreneur just happens to be the house brand for the Canadian Securities Exchange, and Richard is the CEO, so no conflict there. But that being said, Richard and I go back. We work together. In fact, I've been in this organization, the CSE, for 10 years. Richard himself has been here since the beginning, basically 15 years. And that's what we were celebrating today in the office. Again, 72nd floor, First Canadian Place. We had a very special market open ceremony celebrating CSE's 15-year anniversary. And today I want to talk to Richard a little bit about those 15 years, some of the highs, some of the lows, some of the things we've learned, and maybe share some knowledge on what it means to run an exchange and what sort of vision we have going forward to continue to grow this really nice thing that we've started. So, Richard, thanks again for joining us, and welcome to Hashtag Finance.
My pleasure, James.
Wonderful. So let me just start off by saying this. Now that you've had the morning out of the way and you've had a bit of time to reflect, what does it mean to be standing here now as the CEO of the CSE 15 years into its recognition as an exchange? What does that mean to you as a professional and as a person?
Well, as people say, it's a couple things. In one sense, it seems like an eternity. Mm-hmm. We were all a lot younger 15 years ago, and we've learned a tremendous amount about frankly, about ourselves, but about the industry, about how things have evolved in the Canadian capital markets. But at the same time, it's gone by in a blink of an eye, and I think one of the reasons that it feels that it's happened so quickly is we have a great team here at the Exchange. I never dread going to the office in the morning. It was funny. I heard Bruce Linton from Canopy, or ex of Canopy, speaking a few weeks back, and he was speaking to some of his former colleagues, and the guy said, I still get speeding tickets on the way into the office. I feel the same way. Every day is going to be a new experience, an opportunity to learn something, to work with really interesting, engaged entrepreneurs. And I have the confidence that we've got such a great team here, so much experience and commitment to the vision of the organization, which is basically the same as it has been from inception, which is we're here to lower the cost of public capital for entrepreneurial stage companies. And in doing that, I think, and we've had, I think, a lot of success in that. People are committed to it. It makes it fun to come to the office every day to continue to fulfill that mission.
You feel like you're providing a solution that people actually want. It's that's a nice thing. Okay, what do you look for people to come into the organization? What characteristic are you trying to add to the culture? I know we've tossed around a few words, but in your own words, what sort of characteristics do you think fit in here and represent us best?
Well, I think what's interesting about culture is it's self-reinforcing. And so if somebody comes into the organization and it doesn't fit, frankly, the rest of the group will make sure that we'll take care of the issue.
Kind of like Lord of the Flies. But
I don't know that it's that it's that bad. But no, in truth, if people don't have that commitment to customer service, to having that understanding of what it is that we're trying to achieve, and working with the group, because of course stock exchanges are made up of a number of different parts. We have a regulatory mandate where we're working with the issuer companies and their advisors, their accountants, law firms, and investment dealers, and so on. We have some very hardcore technology people who are providing a cutting-edge performing trading system to the dealer community.
Yeah.
They all add up, and I of course will skip over, but I mean the market data folks that provide the visibility for the secondary markets, as well as company fundamental information and historical trading information, and of course your team on the business development side. And all of those folks have to work together to bring together the service that we're delivering to the issuer community, whether it's when they're first coming into the markets and raising that growth capital, or as the company is more mature, they obtain an investor audience in Canada and beyond, and they need or want to trade the stock, they want the market information, they want to be able to see the news, the regulatory filings, and so on. And everybody's got to work together in order to make that happen. And if people come into the organization that may not be prepared to take on that level of commitment, that understanding, as I say, those situations tend to correct themselves fairly quickly.
Yeah, understood. And yeah, as you mentioned, it's a disparate business lines, but at the end of the day, the unifying message about lowering the cost of capital pervades, and then everyone runs with that. And we have what we have today, which is an organization which is, by all accounts, doing well, 15 years into its exchange history. So a couple of interesting things that have happened in our 10 years working together, and one of them you mentioned was cannabis. And this idea that the exchange has been through a lot, but one of the most exciting and unexpected things that we've probably professionally encountered was this growth of the cannabis industry, sort of out of nowhere, really, about 5 years ago now. And here we are today, and we've got 160 plus companies in that sector, many geographically based outside of Canada. What was your initial reaction to what you started to see 5 years ago, and how you thought, from then to now, how's your mind changed or evolved, or your reaction evolved to how cannabis has impacted our business? Did you think it would be this big a deal?
Of course not.
Yeah.
The easy thing would be to say, yes, this is exactly how we set it out on the whiteboard. And but in point of fact, we always knew that we had the knowledge, the capability, the business model, the regulatory model to apply to entrepreneurial stage companies in the public markets. The missing ingredient was an industry sector that was prepared to embrace public capital in order to grow. Other segments which have been here, whether it's the mining industry, oil and gas exploration, and to a lesser extent technology and life sciences, had been historically dealing with the competition in Canada or opting for private equity or venture capital financing solutions. For a variety of reasons that I suspect the listeners and viewers are aware, the cannabis industry, in fact, wasn't able to take advantage of those sources of capital. And it was a very easy conversation early on when talking to Mark Faulkner, our Vice President of Listings and Regulation, about the first couple of applicants. And the question was, do these companies meet our criteria? Are they appropriate companies to list on an exchange? Are they pursuing an active business? Is this something that meets the criteria that we've laid out? And that was actually a pretty quick conversation because it was abundantly clear that, yes, these companies had a significant need for growth capital. In those days, in order to be licensed by Health Canada, they had to have the greenhouse facility or indoor grow operation completed and reviewed by Health Canada and approved before they could actually begin to legally cultivate cannabis. So they, as I say, very capital-intensive businesses. So when we got the first couple of companies over the finish line, and they happened to be Aurora Cannabis and Supreme Pharmaceuticals, that was a real beacon to the rest of the industry that the Canadian Securities Exchange was in fact a good venue, a supportive venue for those companies to list. And literally within, I think, 3-4 months, we had a cohort of some 20 or 25 companies in the space. And people talk about liquidity begetting liquidity, or you start that virtuous liquidity cycle and so on. And for us, that was the beginning of a magnificent relationship with the industry, because those issuers obviously had success in attracting capital. Within a very short period of time, those names were the most actively traded stocks in Canada, let alone on our exchange. And their peers, who were still private or late-stage private companies, would look at that and say, hey, we can cut our cost of capital. We don't need to bootstrap these organizations or somehow raise the money required. We can actually go into the public capital markets and raise cost-effective capital to get into operation. So that really, as I say, was we had all of the tinder that we'd assembled, but that was the match that got the fire going.
Yeah, and not to mention a lot of this was happening in the midst of a really bad bear commodity cycle. So basically the most markets that deal with public venture capital, such as the CSE, traditionally have been heavily reliant on junior mining and exploration companies to fill the board. And at that time, things were pretty dire. Speaking from experience and working out of Vancouver for the organization, the 3 years before that, when I first moved there, 4 years, you see Porsches on the street, and then you start seeing Volkswagens and maybe people walking. I mean, it was very evident that things were really taking a turn for the worse. So to be able to provide a solution at that point in time was for that industry was quite gratifying, because I think a lot of people came along for the ride, and here we are today. And I think things are now leveling off a little bit, getting a little more rational, but at the same time, we've proven that, yes, the market works in cycles, but it also can work wonders when everyone's pulling together. So it was a nice moment in time, and we'll continue to grow with the industry, which leads me to my next sort of question here, which is, looking forward, we're going to look at solutions maybe for the next 15 years that the exchange can provide. And after the break, I want to talk about some of those. So without further ado, throw it to our sponsors, and we'll be right back with Richard Carleton.
We're social here at the CSE. Each and every day we'll keep you up to date on trending topics that investors are talking about, such as cannabis, blockchain, and esports. Follow daily CSE news and events on your favorite social media platform: Twitter, Instagram, Facebook, LinkedIn, and YouTube. You'll find exclusive interviews with leading entrepreneurs from a variety of industries, thought-provoking stories from across the world of finance, and updates from CSE events taking place worldwide. Join the conversation and connect with us today.
And we're back with Richard Carleton, the CEO of the Canadian Securities Exchange. I should have mentioned that earlier. He's the CEO of the Canadian Securities Exchange. And Richard, we left off before the break, and we were talking a bit about CSE's past, and now we're talking a bit about its future. So we had a meeting earlier today outside these walls, and we discussed some of the things that CSE is doing to evolve and grow. Perhaps maybe lay on us the first of three, which I'll tease for you, which for the audience, which has to do with us becoming not just a junior exchange anymore, but something that's focused more on a broader base of securities that we can now soon to list, I'd hope.
Mm-hmm.
Yeah.
Well, I know our podcast viewers are good students of Canadian equity market structure.
Of course they are.
So they would appreciate that exchanges in Canada are divided into two kinds by the securities legislation. You have venture exchanges, i.e. us and the self-named, self-titled exchange. Mm-hmm. And then you have non-venture exchanges, which would be the Toronto Stock Exchange and NEO. Companies listed on the non-venture exchanges have a significantly higher regulatory footprint, I would say, from the exchange, as well as higher standards for maturity mm-hmm. and assets and size operations as they list on an exchange. So as we have evolved, we are uniquely situated in the Canadian market at this point because we have a number of securities, most of the securities, which are clearly venture-type companies. Right. Relatively small, early stage, maybe pre-revenue, and are typically in the mining, oil and gas exploration, life sciences, technology areas. We also have, as people know, a significant number of extremely large operating U.S. cannabis companies, for example, that clearly are not venture issuers for the purposes of the regulation. So we have, through a series of undertakings with the company and conditions on their listings, regulated as if they were listed on a non-venture exchange. So we require more advanced audits. We have companies that need to have larger boards and independent processes for corporate governance, right, as well as more significant review of their continuous disclosure program, for example. There are a variety of things that we expect these companies to do that we don't impose on the early stage companies that historically have been part of the exchange. So with the assistance of our regulators at the BC Securities Commission and the Ontario Securities Commission, we're actually taking what we've been doing somewhat on an ad hoc basis over the last year and a half, and putting it into or updating our rule book to actually include these, in effect, rules as a formal part of the exchange. So yes, effectively, what we're going to wind up with is 2 boards. We'll have to have our marketing geniuses come up with the appropriate branding, but basically CSE Classic and a senior board of larger, more sophisticated operating companies which have listed on the exchange.
Understood. So you're not taking sugar out of Coke and putting stevia in, you're just leaving Coke alone. And then we'll have Coke Zero or something else that people are going to like to drink too.
Yeah, we keep coming back to the Coke analogies on the branding.
That's a classic business, case, right?
Yeah, no, we do have to get there. Now, the benefits to the exchange and to a number of our partners in the industry are really a few things. The first one is we expect to attack the margin eligibility issue, so that companies who are listed on the senior board, their securities should be eligible for margin. That will reduce the cost of trading for individual investors, for dealers, and so on. It will also give us the opportunity to list ETFs, and we've had a lot of interest from ETF manufacturers in specific products that they would like to list on the exchange, as well as special purpose acquisition corporations, or SPACs, which are an increasingly popular means of bringing larger companies into the public markets. It was a U.S. invention, which is now being used by a number of dealers in Canada to basically provide finance to larger and more mature companies.
Yeah, absolutely. Can you just, for the audience, if they're an investor, even just terminology, what is margin?
Margin is basically you thought that was a softball, and it isn't. It actually gets wound. It's used in a number of different contexts.
Yeah.
The classic one is a client will have a margin account with a broker. And effectively what that means is that the broker will loan money to the client in order to purchase securities on margin. So you're putting up less than the full value of the security. And then the security that you have in your client account is held by the dealer as collateral against that loan. And so it's a way that individual investors can apply leverage to the investment process if they have strong conviction that the price of the security is likely to rise.
Yep.
The investment dealer's risk, of course, is managed by virtue of the fact that they can sell that security and cover the cost of the loan in the event that the client is unable to provide that financing.
That's right.
There are other contexts in which margin is used, for example, so that in the clearing and settlement process, a dealer itself has to post margin against open positions that the dealer has during the T+2 settlement cycle. And again, if CSE securities can't be, in effect, included on margin, the dealer's paying 100% of the notional value of the securities that they hold in a net long position, as opposed to other securities, which may in fact only be a 10 or 15% of the notional value that they have to post against the possibility of that trade not clearing and settling. So again, 100% down to 10%, that's a huge cost that the dealers would obviously like to see addressed in some way, shape, or form by making some securities on the CSE eligible for margin.
Right. Okay. And that segment of Business School by Richard Carleton presented to you by the CSE. No, you mentioned a good point about tying up capital. So that leads me to my next evolution here at the exchange. Point number 2, blockchain-enabled clearing and settlement. So again, that whole project is meant to reduce a lot of the friction and capital that gets tied up into the system, because it's primarily a legacy-backed system, lots of paper still in the channel. And you mentioned T+2 settlement period, trying to move something akin to a T+0, so people don't have to move and as much paper around, pledge as much capital. Now, very briefly, because I think we touched on it last time we talked to you, but where are things at with that project? Where do you see that going timeline, line-wise? And, what are you most excited about in general about that initiative?
Well, I guess I'll start with the last part first.
Sure.
we sometimes get very involved in the technical details and the amount of work and technology that we're going to deploy to make this project a success. But if we think about it from the perspective of the investors and the issuers, so what is this initiative going to provide for them? And I guess it's entirely in keeping from an issuer perspective to our mandate to help reduce costs of capital. And let me give an illustration. So right now, the existing whole back office securities clearing and settlement process makes a lot of different securities cost prohibitive as a public offering.
Right.
But you see those deals getting done, whether it's a perfect example is securitizing a back catalog of a musician. Right, so that you package them together, and the royalties that are earned, whether it's through radio airplay or licensing for advertising or whatever, they go to the holder of that trust, basically. That would be a great product to have in the public markets. Like, who wouldn't want to have the back catalog of your favorite musician?
We're in a content-driven world, and honestly, the way you're going to have to monetize content is going to have to get a little more creative. Absolutely, yeah.
Exactly. But this thing has value.
Yeah.
Now, the problem is that all of the administration and all of the processes that we have in the securities industry right now, it just doesn't work if you're going to market that to the general public and have anybody able to come in and say, buy 100 units of the Lady Gaga back catalog or what have you, right? Instead, what happens is it's will go into a private equity arrangement, and one or two extremely high net worth people will actually do that deal, right? So the best known one was when Michael Jackson bought the Beatles back catalog, for example. I mean, who wouldn't want to own the back catalog for the Beatles? The revenues that flow from that are just are exceptional. It was one of the best investments that the Jackson family made. But with all of this new technology, the blockchain basis and smart contracts and all of the things that, again, get way beyond the detail level that we need to go into today. But what that does is it makes it available to have that transaction available to individual investors and to have those units listed and traded on a stock exchange.
Yeah, absolutely. Okay, and we'll leave that point there. But the third thing we talked about, or I think we should discuss, was what happened this morning today in our office. So basically, the CSE, it's evolved. You got to start introducing new services and certain things are expected of you. So for the last 15 years as an exchange, the CSE never really had a market open experience, a bell ringing ceremony. Trust me, we've had to throw some together ad hoc over the years, and they've been kind of in the spirit of who we are as an organization, been pretty plucky, and we I think we made our clients happy, but certainly didn't reflect really what we were as an organization. So today we unveiled our first market open at the CSE Media Centre, and to that end, that's part of a broader initiative to continue pushing content and marketing from our own four walls here, because we have a lot of stories that come through the exchange, and I think we're equipped now in today's digital age to tell these stories through our own distribution channels. So it's an exciting that the team has shared that vision, that we've been able to produce a lot of content here, and we continue to do things like the podcast. But today was a big one. That was every couple days a week, Tuesday, Thursday, perhaps. We're gonna have these market opens, and that's exciting. But tell me how you felt, because you were the guy ringing the bell for the first time ever, the official CSE bell. How did that feel today?
Well, it was a fantastic experience for sure. Again, and humbling in many ways too. When I was talking to the team beforehand, I was thinking back to when the board asked me to take over the CEO position, and as I said, truthfully, I did so without hesitation, on the basis that there were just so many people here that I respect, that have been so committed to achieving the vision of the organization over all these years. And so, again, it was a privilege for me to be the guy, the hand on the bell. But at the same time, I was thinking about, again, the team members that we've had from the start, who've sacrificed a lot. Things were pretty tough in the early days. We had to put up with a lot of, ridicule and nonsense from various quarters of the industry.
We'll call it flack, yeah.
Sure.
Yeah.
And to basically survive, and now, if I can be so bold as to suggest that we're prospering, is, to be blunt, one of the most satisfying things that I've had a chance to experience in the course of my business career.
Mm-hmm.
And I'm certain that the rest of the folks in the room, many of whom have been with the organization for a long time, felt the same way.
Yep.
And so, as I say, it was both a proud moment and at the same time kind of humbling as well.
Yeah, and let's hope it's not just the end of 15 years, but the start of the next 15 years. And, I don't know if you want to work that long, but,
our chairman, as you know, suggests that all of us are just getting started in comparison with Mr. Caldwell. So,
sure enough. Yeah. If you eat your vegetables, you can work well into your later decades. Let's just put it that way. So, we'll leave it at that, Richard. I just want to, thank you again for your leadership. Thanks for joining us today in the studio. I think we should raise a toast of this orange juice. Maybe there's something else in there. Boom. To more podcasts and to more years of ringing the bell. And again, if you're watching today, please subscribe on CSE TV. We'd love to have you as a subscriber. You'll get this automatically on your feed. And then if you listen, please subscribe on iTunes, Spotify, anywhere you get your podcast. We love it when you subscribe. Thank you again for watching or listening. This is James. I'm with Richard. Cheers. And here's to 15 years.
All righty.
All the best.
Hi, it's Grace from the CSE reminding you to make sure to follow us on social media for the latest updates on our listed companies as well as new listing alerts. For more in-depth content, be sure to pick up our free quarterly magazine, Public Entrepreneur, available online at thecsc.com.